Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for the 15th of April. We are smack dab in the middle of the month. Taxes are due tonight. Get those taxes in the mail or file electronically so that your taxes are in and they're done with. With that said, I had a very, very interesting conversation last Thursday evening. I ran into a friend who is also a registered investment advisor, who also owns his own firm, who is probably 10 to 12 years older than me. So that puts him at 63, 64 years old. And as we said hi, I'm like, hey, how are you doing? And that was the last thing I said for about 20 minutes. For 20 minutes, all I heard was, boy, does our industry suck. Boy, are people jerks. Boy, are people idiots. I mean, this guy just went off. Went off on his client base, went off on the industry. He went off on everything for 20 minutes. I was shocked. If that happened to you, what would be the first thing that went through your head? If you had someone that was in the same job you worked at, you just met him, I probably haven't seen him for a year. What would be the first thought going through your head? So that's interesting. That's funny. I don't want anything to do with that guy. All right. I'll give you that one. Yours cable to earth. He's having a bad day, right? He's just having a bad day. I'll be the first thing that went to me, and I think I nailed it. He wasn't getting any returns this year and lost his butt last year due to bonds. And I'm pretty sure I'm pretty close to that. I like that one. Don't want to be his client. And the last one, I think it's very interesting. Time to retire. From what he said, he was accumulating noise and no real signal. Yeah, I mean, I was shocked. Usually when you go to someone that you haven't seen in a year or so, hey, how you been? How's business? And then if you know them, how's your family? How are things going for you? I mean, that's where I consider a conversation to go. I also think it was lacking gratitude. And I went with gratitude because of a simple, just a real simple sentence. If you aren't happy with who you are, with the situation you are in, or with whatever circumstance you are in, change it. The other side of it, and Lee, I don't see everything there. Some is blocked off by my version of it, of GoToWebinar, excuse me. Or enjoy the small wins, small details, small, I'm going to call them building blocks. It took me decades to be able to feel comfortable understanding and learning how to trade my money. I'll be honest with you, last week, and I'm going to go through the numbers. Last week, the S&P was up 0.04 and was down 0.04 and we were down 0.31. So we missed the S&P on this one by almost a little more than 0.25%, 0.27%. On Tuesday, S&P was up 0.14, Hurley Investments was up 0.14. On Wednesday, S&P was down 0.95, Hurley Investments was down 0.57. If you take that 27, we're now beating the market by 0.11%. On Thursday, the market was up 0.74, Hurley Investments was up 0.74. On Friday, the market was down 1.46, Hurley Investments was down 1.00. We beat the market last week by 0.57 or a little over 0.5%. That's a win. As I was talking to this gentleman, his clients are clients. I don't think he's developed a single friend in his client base. I asked him, I said, well, hey, do you ever call your people up? And he's like, I usually don't talk to them for years. And if I go through, and I'm just going to make a couple comments here. I don't talk to Abraham very much, but we do a lot of email back and forth. Abraham lives out in Brazil. Bill Brandner, we probably talked to quite a bit. Jim, we have talked to. In fact, I've gone to Jim at times for some parental advice. Lee Maxwell, boy, Lee and I usually were talking about once a quarter. He had an accident, and I thought the worst for him, but I ended up going out to Lee's house, and boy, we packed over 10,000 pounds of trash into a rental. Boy, it was a what do you call them? A trash container, the big 20-foot one. But I drove myself out from Utah out to Northern California with one of my boys, and he was moving his house. We packed up stuff from his house. We packed up trash like there was no tomorrow to get it out of his house. I really enjoyed talking to Maud. Lance, I've enjoyed talking to you quite a bit in the past. Russ and I have had some great conversations. Stuart, you and I have talked about trading. In fact, Lee just typed in it was a 30 cubic yard dumpster. So my boy and I got to go out and help Lee after an accident as he was moving his homes, fill up a 30 cubic yard dumpster. It was just over 10,000 pounds. It was unbelievable. A lot of weight. Mary, we've talked before. In fact, it's funny. Maud, I've talked before. She's a doctor. I've enjoyed talking to you about doctor stuff or business and small business in general. And Mary, same thing with you. I've enjoyed talking to you about owning a small business. And I'm just using these comments because if you can't find some gratitude or some joy in what you're doing, if it's always frustrating, it's not something you should be in. And I'm making the comment to one of you tonight because I know one of you has had an unbelievable amount of frustration in the stock market. I understand. But if you can't enjoy some of the little things like beating the market on Friday by almost 0.5% and beating the market by over 0.5% for the week, and having some wins in your portfolio like Micron, Disney's been a win this year, Meta, if you can't understand and see those positives, then this is not the place for you. One of the things I thought was most impressive is once I became a registered investment advisor, it was easier for me to follow the rules that I have in place for making sure that we're profitable over the long run, that we're going to beat the S&P over the long run, that we're not going to see ginormous, excuse me, ginormous downgrades or dumps in your portfolios. I made a mistake moving to Schwab. I can really complain, and there's a lot of things I don't enjoy about Schwab that they're being fined for to the tune of millions of dollars. And I can either complain about it or we made a change. That change is going to be significantly helpful to us. We're going to be able to now add protection on like we should have the last half of 2023 and through the first half of 2023. It's those kind of things that we want to be able to do so that we can continue to add shares and continue to have portfolios grow. As I left this gentleman last Thursday evening, I felt sorry for him because he's got 34 years or 36 years in the industry. And if you ask me to spend 40, 50, 60 hours a week in an industry that's the way you feel about it, I don't want to call it a waste of a life, but man, I didn't know how to tell him life needs to be more than just this anger and frustration. You need to be more than who you are as just a registered investment advisor. I really enjoyed seeing Scotty Scheffler win the Masters. When they asked him, they're like, okay, what pressure are you and how do you define yourself by winning this tournament? He's like, I don't. It's just my job. My job is golfing. And the guy just won $2 million, won one of the Grand Slam top 4 events in golfing, #1 in the world. And he's like, yeah, I'm just Scotty. It's just what I do for a job. It doesn't define me. If I had lost today, he's like, I lost. Wife still loves me. We're having a baby. There are things that were more important to him than his job. And I didn't know how to tell him that. All I could think of was, man, this guy is just hating it. And it's sad because there was a time that we're like, we need to work together. And for whatever reason, I'm like, I don't think so. Not going to happen. And I chose not to pursue that path on down the road. Easy to say, hey, good choice, right? Easy to say, great choice. But you just don't know. In fact, really the key to investing, and I'm just going to tell you the key to investing Can you tell that T key is still there? Key to investing. Making your best educated decision. Adjusting if you are wrong and protecting the majority of your capital. It's really breaking it down to the nuts and bolts. You better do your work. You better do your work to make your best educated decision on what you think is going to beat the market, and you better have the work behind it to justify it. You're going to be wrong sometimes. Adjust if you're wrong. Don't be so bullheaded that you'll lose half your capital, because a 50% loss requires a 100% return to get back to break even. Adjusting if you're wrong can be to adding puts and checking, going back and checking again to make sure your due diligence in the work you did is correct. And the key is really you make the best money, you win the game by the best defense. It's not the offense. Protect the majority of your capital so that you can be in the game long enough to get a big win and to see your portfolios really take off. It's that simple. We are approaching earnings season again. But come on. The three indexes are now bearish. In fact, pretty interesting. We're going to pull up our charts really quickly. We're going to start with the NASDAQ here. The NASDAQ just broke the 50-day simple moving average. We have our bearish signals, and breaking the 50-day simple moving average usually means more sell orders are coming. We talked about it last week, and a couple of you questioned me. Really, Kevin? We can go back down to 15,584 when we were at 16,464. You're like, we could go down to an even 1,600 or get into the 15,000s again? 3 days ago, we were roughly 600 points higher, 580. Yeah, it can happen. Thank goodness we were protecting along the way. S&P 500. Bearish. In fact, I should just copy it. Boy, it's a spitting image, right? Exactly the same thing. We have broken a trend line, a 50-day moving average. That means the buy orders are used up. The sell orders are in play. We talked about 49.83. We talked maybe going all the way down to 46.62. It's interesting because that would be right where we started the year at, if we got back to the 46.62. How important is protection now, right? How important is protection now at looking at the way our markets are moving? And even worse, the Dow Jones is just bearish, outright bearish. But what's really interesting, Started out right around here at 37.8. Closed today at 37.7. Now, technically, if you do your math, the Dow, I think, is up 0.12 for the year. 0.12. So it's given up all of its gains for the year. If you're in a fund, most funds don't beat the S&P 500. S&P's up like 6%. Thank goodness we protect. Thank goodness we don't just stick you in stuff that's a fund. Thank goodness we're not in a bunch of bonds that haven't come back yet because we haven't had any rate cuts yet. So not only did your bonds become worthless and you were told to hold on to them last year, or lose a lot of their value because they were not paying the same interest rate, this year those interest rates are still high. So anything new that you've purchased and taken a loss on the previous stuff, or anything you're waiting for to come back and get some value as interest rates go back down, hasn't happened yet. In fact, it might not happen this year, period. The couple of you that spoke with me last year on how much you lost on your bonds and if things would come back this year, I told you I didn't see 1.5% or even 1%. I guess it was 1.5% and 2% was the expectations on the rate cuts, right? 6 rate cuts, 2%. I couldn't see it. I couldn't calculate it. I couldn't come up with that number. It was extremely hard to explain how rate cuts could get there. I just didn't see it. The numbers didn't add up for it. And then for those of you that have talked to me this year, well, I got into some bonds at the beginning of the year. Hopefully they're going to gain more value. If we don't have any rate cuts, they're not going to gain value. In fact, they're going to lose value or time value as those bonds keep running the life of their bond life until their expiration. So you locked in a coupon rate. It's got a higher rate. You might be able to sell the bonds for some additional premium if rates come down. But this is why we don't do a 60-40. If 40% of your portfolio is in bonds, you can never match or beat the market unless the market's down. And with high volatility and high interest rates, with all the inflation injection into our economy of all the stimulus money, bonds are just dead. They're dead money for like 10 years. They truly are. I just couldn't see. I just couldn't come up with it. That's why we do what we do. Okay, earnings coming up. For this week, I made our list again. So I've got our list. AMC is after the market close. BMO is before the market opens. If they don't have one, then it's an estimated earnings date. They're not out there yet. We have Bank of America this week. We have Netflix this week. I don't know if you noticed, JP Morgan had very, very little interest income coming in. In fact, their interest income was horrible. That's why we protected Bank of America last week. I think we did it on Friday. We protected Bank of America because of JP Morgan's earnings and because Bank of America has earnings tomorrow morning before the market opens. On Thursday, for those that want to follow Netflix, we're following Netflix to see how they do for their movies. It could be an outlier on how Disney will do. Key Corp also reports a very cheap bank. It might get so cheap here that you've got to buy into it. But we're going to look at Key Corp's bank earnings on Thursday as well. The majority of the earnings will come in the next 2 weeks. We'll see the majority of the earnings be from what? The 22nd through the 26th, and then the last full week of April, which will be the 29th through May 3rd. That will be the bulk of our earnings. Because the indexes are bearish, we are protecting just about everything but Under Armour. Little disappointing to see Under Armour not move today after great retail sales. Retail sales beat the expectation significantly, yet Under Armour didn't move. So kind of a bummer, but does anyone know what's causing our markets to go down right now? Not to stoke a bunch of fear into you, but anyone know what's causing our markets to go down? If we were ever going to have a World War III, it would be today. And I'm just going to be completely honest. Our administration, the White House, is full of idiots. According to, I don't think he's a staff sergeant, Sergeant Rodriguez, SEAL team in San Diego, Iran not only shot 300 drones, but over 100 missiles into Israel because a couple of their military leaders were killed in, I thought it was Damascus, Syria. Israel did not confirm that they had attacked those Iranian military individuals or leaders. So Iran went after Israel. And as Sergeant Rodriguez told me, he's just sat there and said, you know what? It was hilarious. Iran gave it its best shot. Over 400 threats were launched into Israel. And for all intents and purposes, the most severely injured person was a 10-year-old girl that was hit with some shrapnel. That's it. And then Iran has the guts to say, hey, don't attack us. We're just getting even. Sergeant Rodriguez has already been called up. They're expected to go to the Middle East. And his comment was, oh, if Israel ever wanted to make a statement without the world backing him, without the U.S. backing him, now would be the time to attack Iran and to wipe it off the face of the earth. I'm not in the military, but what I do know from what the people that are in the military are telling me, disgusted with the administration and how they've handled Israel over the last 6 months and the lack of support that they're currently getting. If we were ever going to see a start of World War III, it will start with Israel finally saying enough is enough, and it'll be Israel against Iran, Iraq, Syria, Yemen, and Lebanon. The U.S. is moving its troops to the Middle East. It's scary if you are religious and read the Bible. All kinds of things are happening right now that are just, they kind of freaks me out. And when you see the military that I know of and their stance on this, it seems like everyone's ready for a fight. Maybe we need to get into more MRO oil, even though it's had a ridiculous run. What an opportunity to get into some more oil, expecting, well, we've got earnings coming up on Marathon Oil pretty quickly here, but expecting next earnings dates on the 1st of May. I would expect their prices to go up pretty significantly. Don't forget, Ukraine attacked into Russia, 100 some odd miles into Russia, and took out some of their oil refinery capabilities last week. So we really have some oil things coming up right now. If we have extra money coming out of Meta on Friday, oil is where it's going to be. All right. A couple questions I think just came in. Let me get those answered really quickly. Valero's earnings on 425, Chevron and Phillips 66 on 426. I would pay attention to them, but I think the opportunity is coming to really enjoy some gains on oil. Okay, not much there I wanted to go over. Economic reports were really light. Housing starts and building permits, digital production capitalization tomorrow. Leading indicators on Thursday, but this is a monthly options expiration. If we were ever going to have that 3 to 5% pullback, we're well on our way from last week, and we're well on our way to complete it this week. It might be pretty interesting to see a 3.5%, 4% down week this week to then get a little bit of a rebound based on earnings. How am I looking to trade? We are mostly protected for earnings, meaning we were jumping on protection last week. I've got the Israel there, prelude to World War III, just more information. So you're getting it from someone else other than me. Apple. If you're an Apple fan, their channel checks are not looking good for their phones for 2 quarters in a row, which is interesting because they buy back their old phones that they've already sold and resell older generations to certain parts of the world to make more money, to resell old phones to increase their profits. But I'd be a little worried about Apple. We got protection on Apple at 175 today. All right. Interesting shift on China. One more article I just wanted to give to you guys. I had it last week, but I didn't put in. Just interesting to see where talks are going with China. It seems like everything that, again, the administration did last week was not very helpful for us, but this is a different side of things to read from an unbiased source that says there is some opportunity there. With that said, any questions you guys have for me tonight? I'm going to give you 15 seconds to type anything in. Any questions you guys have for me tonight that I can try to answer for you? Yes, I'm showing gratitude. I'm grateful for the job I have. I'm grateful for you guys because I consider all of you friends. I've come to many of you for advice on children, advice on life. I would like to think I'm a grateful individual all the way across the board. Obrigado, Abraham. Expect a down week. Yes, I could see the S&P 500 being down 4% this week. We already lost what? How much were we down today? We already lost 1.5 today. 1 point. Oh, that's the Nikkei. We already lost 1.20. So we're talking about another 2.8% throughout the week. Yes, we may go to long puts on the SPY. We're not there yet. This was the first day. So again, little interesting. The first day, going the wrong way. The first day that we break the 50-day simple moving average doesn't mean you pile on 100% negative. One day does not make a trend. Yes, we are technically bearish. Yes, we just broke the 200-day. But that does not mean we're not going to bounce right back tomorrow. That does not mean we're going to go back to the 200. It means we broke a support level that we could see a farther drop down. So you don't go all in here. It's not verified. You're looking for 2 to 4 days to verify a trend. Well, we've got 2 down days. The last week was negative. And I know you talked to me last week and say, hey, I thought you said we're topping, we're rounding, we're heading back down. Yes, that's what the chart showed, but that chart showed that same rounding, that same topping right here. Boy, we showed it again right here. Yes, we showed it again right here. It's kind of done it 2 or 3 times. Technical analysis is a social science. It's scary because you're making your best educated decision. Again, if you had thrown everything bearish right here, you would have blown it. Same thing if you took the bigger trend right here, you would have blown it with a gap up. Well, now it's crossing a 50-day. I understand. Give it a little bit of time to prove the trend. That's all I'm saying. Where's the bottom on Boeing? The bottom on Boeing is probably 160. And that's just going back to a previous stuff out of my way here. A previous bottom. So I think I'm talking about the gap right here, and the gap right here, and the gap right there. We're already touching almost to the penny 167.58. It touched 167.53. We are definitely oversold. When you see it oversold, it usually goes higher. So the short answer is, I'm saying we're probably at the bottom, or we've got about $7 more to go. If we don't, next stop is going to be 150, 135, and then 120. But I would say if you're interested in Boeing, you can start to jump in about $7. $7 more to the downside, or if maybe you see a bounce tomorrow, might be a good entry point on Boeing. And that would be a great position. A leap on Boeing gives you plenty of time to be wrong. But if you can afford 4 leaps, go ahead and do 1 leap. And then that way you can dollar cost average and spend another 50% for, when it goes down by 50%, if it does, you can dollar cost average. And then if that goes down 50%, you can do it 1 more time. But you only dollar cost average twice on a leap. Otherwise, you're throwing good money at bad, and you got to admit you were just wrong. But you're very close. If you're looking at Boeing, I would be very interested in adding a leap around 160, and I would probably be getting out at that 193, 190 level. So you're going to run it up about 30 bucks. And a profit would be better than a loss, right? Boeing, I have it on my list. It reports on the 24th of April before the market opens. That'll be an important date for you. Maybe we'll get a bounce, a pre-earnings run. But again, this week I would expect the market, low tide sink all ships. So the market's going to pull most stocks down. I would expect more of a bounce on Friday or into next week. Are there any other questions? No problem, Maud. Any other questions you guys have? If not, I will see you on Thursday. Perfect. I will see you guys on Thursday. Pleasure being with you. I'm grateful I get to call you my friends. I'm grateful that you guys have been able to give me advice on certain aspects of life. And I'm really grateful that I get to do this for a job. I absolutely love what I do. A week like last week just again tells me the methodology works, the system works, mathematically it can be proven. This is what we're doing to be able to beat the market significantly over a period of time. Guys, take care. Have a wonderful evening. Look forward to seeing you Thursday morning for the trade findings and adjustments. Have a good evening, and I'll see you then. Bye-bye.